So when you're new to the trading or investing world, figuring out which indicators you should be using on your chart can be a bit confusing. In this video, I'm going to show you from my 6+ years of day trading experience exactly which indicators I think you should be using as a beginner to give you a simple and clean-cut view of the market. Then at the end, I'm going to show you how to apply all of these indicators into an actual real-life trading scenario. Okay, I'm going to put chapters in the bottom of the video, so if you already know some of these indicators or you're looking for something specific, you can just jump forward to that moment. But I highly recommend just blocking out 15 minutes because I think that a lot of the content in this video could dramatically expedite your learning process. Okay, and if you find this video helpful at any point, make sure you give it a thumbs up for the YouTube algorithm. And also, if you're interested in crypto trading and investing, make sure you subscribe to the channel and join our community. So as I'm sure you're probably aware, trading is not an easy thing to do. Okay, it requires a lot of training, a lot of knowledge. So I think it's going to be really beneficial for me to highlight all of the most important indicators that I use. And I've sort of been able to, trim the fat to a certain regard because there's so many indicators and there's so much mess that can honestly add to confusion rather than adding clarity. All right, so the first indicator that I think is super important is the volume indicator. Really what we're looking at with trading is an interpretation of human action that's represented as a chart. Okay, so we're watching buying and selling go on. What volume is going to show us is how many units have been passed back and forth. Okay, so let's just look at Solana on a 5-minute frequency. If we look at this period of time, obviously the price has moved down a significant amount. During this period of time, we can look at how many Solana units traded hands throughout that time increment. So in 5 minutes, we've seen nearly 90,000 Solana trade hands. The red candles means that over time there was more selling than buying. And then when we have these blue candles or whatever color you're going to make them, that signifies that there was more buying over time. And we can see as a result of that, we've seen a positive candle here. And so volume is really going to show you two things. It's going to show you if there was more buying and selling over time. And it's also going to show you how many people are transacting in that certain currency pair so that we can see how easy it's going to be to get in and out of the trade. Okay, it's sort of referring to liquidity, which is how many open orders there are for us to be able to flow easily in and out of markets. And depending on that, we're going to need to use specific order types. Okay, that's not really what we're talking about in this video, but volume is really important to see how many people are buying and selling and what the overall sentiment of the current market is. The second indicator that I want to talk about is called MACD, and it stands for Moving Average Convergent Divergent. All right, this is a short-term momentum indicator that has two components that really show us short-term changes in trajectory of a cryptocurrency or whatever asset you're trading. All right, and like I said, it's made up of two values. Okay, so if we look right here, we have the MACD line, and then this red line right here is called the signal line. The MACD line value is calculated by taking an EMA with a 26 period and subtracting that by an EMA with a 13 period. And this is going to give us a more reactive line. Also called the signal line is a 9 period EMA. So it's a little bit less reactive. So when we see short-term momentum changing and going under or over the sort of longer-term, less sensitive momentum line, this can indicate shifts in price direction and sort of give us some sort of basis as to when we're going to see reversals in the market. Now, if we look at this massive move down, okay, we see MACD crosses over this line, sort of rides underneath trigger line, and then we have the MACD crossing up through this trigger line. Okay, so intuitively, it seems like, oh, well, if I just buy at the crosses, I could just buy here and then sell here and I'll make money, right? Trust me, I tried this in the beginning of my career and I thought it was going to be super easy, but the problem with MACD is it's an extremely reactive indicator, meaning that this is going to give you fake out signals almost all the time, and then the price action is going to develop and the indicator is sort of just going to follow it, and then after the fact, it's going to look like it was super clear the entire time. Hindsight's 2020, but there is a way I've learned sort of how to use this to our benefit in conjunction with other indicators to sort of add conviction and add some sort of confluence when we're looking to take these sorts of trades. Okay, so what I like to do, I look at the relative range of the MACD based on these price swings, and I see the range where we like to see the MACD move and then start to come back to the trigger line, and that is oftentimes going to be the areas where we're going to see accurate reads on MACDs. Okay, so we can see right down in this range about negative 0.35 to negative 0.4 is sort of the range where the MACD likes to come down to and then start to flip around. So any zone down here is really going to indicate that once we start to see a cross, there's a good chance that this is actually going to take another swing in the opposite opposite direction. We're not using this to make definitive trading decisions, but we can look at this with other indicators and use it as supplemental evidence to figure out when markets are probably going to be trending up, and then when we're trading underneath the trigger line, usually markets are going to be a little less strong or maybe trading down. All right, the next indicator that I want to talk about is called VRVP, which stands for Fixed Range Volume Profile, and that's exactly what we see over here on the side. This is basically showing us the volume levels compared to price, where we're seeing the majority of the buying and selling, and we can see all the buying and selling represented by these colors here. And this red line that comes across is going to show us where the majority of the volume is coming in on the chart, which if we look, oftentimes is a serious level of support and resistance where the price has an issue breaking down through because there's so much participation happening at that level. Okay, we can see multiple levels where this sort of consolidated through here, caught support, couldn't really make a decision, and then it broke down through, retested, and then this was also the area where we saw the price go crazy up through once it actually broke and continued to move through. So this is going to show you big levels of support and resistance on your chart. All right, the next indicator that I want to talk about is called strength versus Bitcoin, and this is a fairly important indicator to get a concept of how strong individual cryptocurrencies are compared to the overall market, which is basically Bitcoin. All right, so on this indicator, we can see a line that's plotted that's going up and down through this zero level right here. So anytime we're seeing this green oscillation up here, this is showing us how much more strong or weak the individual pair is to Bitcoin. And that's really important because when we're finding trades in our internal trading team, okay, we're looking for pairs that are going to give us the highest chances of winning. So even though all of the patterns roughly look the same, we want to pick the pairs that are going to be respectively stronger or weaker so we can increase the odds of us not getting stopped out and letting the trade actually come to fruition. All right, so next indicator that I want to talk about is the crowd favorite. This indicator, I actually do specifically make trading decisions on. When something happens, we can take action on it, and it's not going to sort of retract the signal. Once the signal is represented, it's there. It's going to give us the information, and we can make real decisions in real time. Okay, so I want to explain a little bit how this works, and then show you an example of how we can use it to benefit our trading and be able to take trades on this. Okay, so it's called an RSI, but basically an RSI is measuring the speed and magnitude of a security's recent price change to evaluate overvalued and undervalued conditions. Okay, we have a full scale from 1 to 100, and then anything under this threshold that you can see in gray right here, which is at 30, is considered undervalued, and then anything over this 70 value in here is considered overvalued. There's a few more components to this RSI than traditional RSIs. Okay, so first thing that I want to talk about is the direct RSI right here. Whenever we're getting the line going above this threshold, we can consider it overvalued. And the same thing when it's going underneath this threshold, okay, this is considered undervalued territory. Okay, one thing that I really like about this is this actually has what's called an RSI cloud, which is giving us sort of a standard deviation off of the direct line, which is essentially like a Bollinger Band that's calculating volatility on the price. So we actually have two layers of confirmation. Okay, the first layer of confirmation is when we have a cloud highlight right here. So this not as dark bar is letting us know that the cloud, which is this area, has dipped past our undervalued or overvalued territory. So you can see right in here, in scenarios where we have both the cloud and the RSI line both going past this lower threshold level here, we get a dark highlight, which almost always is a very, very good indication that the price is probably going to stop accelerating downwards and sometimes even reverse and change directions. Okay, we can really see good examples of this working so much on the chart. And the good thing is, as soon as this happens in real time and the candle closes at that price, you're going to get these highlights, which in conjunction with our trading system that I'm not going to share in this video, but that we trade, actually gives us the trade signal on whether or not to buy or sell this cryptocurrency at a specific price. Price comes down, we get our double highlight in this range, and this was the exact bottom of the price action. And then we have the move that comes all the way up back here. As soon as we get our highlight up in this zone, this is basically the top of that range on Solana. Okay, once again, We didn't have a move down into the undervalued until we got up to here. We got another overvalued signal, which is the exact top of the price action. And then on this lower move right here, we got our whole highlight signal. If we look at our fixed range volume profile, is exactly the same level where we saw the most buying and selling, which is a high conviction area for a reversal. And so you can start to see how we're using these indicators in conjunction with a back tested system to be able to take trades regularly on these and be able to make informed trading decisions using all of these indicators in conjunction. All right, the next indicator that I want to talk about is Fibonacci. I'm sure you guys have heard of Fibonacci a ton if you've been following this channel for quite some time, but this is the perfect example of a non-reactive indicator. Okay, if I draw from the low of this trend to the high of this price action right here, anything that happens once I establish my high value up here, back here, nothing is going to change. So we really can't get false signals. The price is just going to interact with certain levels over here, and it's our job to be able to look at them and then interact with the chart accordingly. All right, and so basically what Fibonacci allows us to do is see certain naturally occurring retracement levels off of trends. So if we have an uptrend, a low point on an uptrend and a high point, okay, we can look at retracement levels that oftentimes are hit and use that in conjunction with our trading system as well. All right, I'm going to talk about one more indicator that's really geared towards investing and long-term holding that can show us areas where there's a high chance that we should probably be taking some of our position off. And then I'm going to explain all of these indicators sort of in a real trade example to show you how they're all working in conjunction. All right, I'm just going to pull up a Bitcoin daily chart and we're going to go over this here. All right, so the next indicator is called the Mayer's multiple. Okay, this takes the current price of an asset and it divides it by the price of the 200-day moving average, which is going to give us this relative scale. And then this red line here is actually the 2.5, or I think it's actually 2.4 multiple off of the 200-day moving average, which statistically is areas where we start to see a regression and sort of a sell-off in price. And we can look over here, and anytime we've seen these massive swings up in Bitcoin or any of these larger coins, okay, at this point right here, we started to get our red highlights over the Mayer's multiple, which is showing us, you know, maybe not the perfect top, but it's definitely saying, okay, the Mayer multiple is red. We could be at a potential short-term top of some of these larger assets. Like I said, I wouldn't recommend using this on an intraday level, but as far as investing, it's a really good tool. Okay, then it changes colors, which goes back to yellow, which puts us in a normal area right here. And then if we look up to this level, okay, all in here, we had our red Mayer's multiple highlight. Like I said, you're not going to time the exact perfect tops of markets, but using other technical analysis and Elliott wave theory, which we actually talk about timing markets in this video. I'll put it up somewhere in here in a card if you want to watch how to time tops of markets. Here we got another red highlight, and this actually was almost the exact top of Bitcoin. So I just want to talk about that as far as investing. I recently have started using this, and it's been very helpful for me to get a concept of when it's probably time to start taking some money off of the table. All right, so let's go over and look at a trade example where we took a long on Uniswap here, and we're going to look at all of the indicators that have now helped us be able to make a clear trading decision on this. Okay, so the first thing that I'm going to look at is volume over here, and we can see in this region, we obviously have a significant amount of selling, but nonetheless, we have basically a pretty consistent stream of buying and selling, which means we're going to be able to get in and out of this trade fairly easily. Okay, that's the first thing that I want to look at. Second thing that we're going to look at is the strength versus Bitcoin. In this situation, at the time of entry, we were a little bit underneath the strength of the overall market, and we really were sort of sitting around this centralized threshold, so really no issues there as far as the strength versus Bitcoin indicator. If we then go down to our MACD indicator, we can see we are in the bottom portion of this range where the MACD tends to be in a range to react to reversals. Okay, down in this range, we have this one, and now we're back down into this zone. Okay, then once we look at those things sort of all lining up looking pretty good, we can go over to our RSI plus, and we actually are getting a dark highlight at the exact time of this entry. So you can see we have our highlighted portion down here. All right, so all of our indicators are lining up, showing us a potential reversal level down in this region. And if we weren't looking at any of these indicators and we were just looking at the chart with nothing, okay, we really would have no concept of the range of where this could possibly start to slow down. Then we bring up our indicators, and this is going to give us that confluence and that sort of support that we're actually able to take the trade based on our other technical analysis and the way we take our trades in general. This RSI is my favorite indicator because if we look at, Okay, price turned around. We really didn't get any other highlight action until this exact point where we got our first highlight. And if we zoom in on the price action, okay, this is the exact top of the price action, and this is happening in real time. Okay, we're getting this highlight as soon as we get a candle close here. So as soon as we get our highlight, if we were to close our position, we were literally getting out at the exact top until we got, you know, a slight push up over here. But on these smaller trades, you don't really want to sit in trades for too long. So this is giving us a really, really clear picture of exactly when the price is likely to turn around. If I had to pick one indicator to use, it would be this RSI plus indicator. You can see even at this peak over here, we got our major highlight right in this zone, and this was the exact top of Solana once again. If we look at our lows down here, this was a temporary low. Okay, this was a temporary low at this highlight. You can't only use it, but it's very, very strong as far as giving us conviction to take these sorts of trades. And this is just scratching the surface of what we do on our premium trading team. If you're looking to trade cryptocurrency alongside me and my team, we have a whole entire training to get you up to speed in a private trading team where we're basically doing this all the time. So if you're interested in that, I'll put a link in a card right here in the description. But as far as simple, effective indicators, over the years, these have been the ones that I've boiled it down to, so I wanted to share that with you guys. If you're still here, make sure you give the video a thumbs up and subscribe to the channel if you haven't done so already. But that's basically it for today, guys. Until next time, I will see you all in the next video.